Hello, friends. Oh, sorry, wrong screen. Hello, friends. Welcome back for Tezos Technical Analysis video here today with myself, Rocky Outcrop, your friend. I hope you're all doing really well out there. Whoa, interrupted my flow a wee bit. Now, I have a question to answer about this one. We'll be taking a look at the Bitcoin pairing and the US dollar pairing as ever, but I thought I would go over to the comments here and take one from yesterday from Joshua Newton. Hello, Joshua Newton. Is that the same name as that singer that did that song? Please catch me. Anyway, I think I see a bull flag forming on the yearly chart for XTC UTZ shortly after March 2020. Am I right or wrong? Well, Josh, my friend, you said the yearly chart. Now, we know that you're wrong just based off of that, just purely based off of the way you've asked this question. How can you see anything on the yearly chart which is forming just after March 2020? That doesn't actually stack up. I'm sorry to say it, my friend, because if I just go to the dollar prices, take off all of the drawings that we've got here and go to the 12-month chart, i.e. the yearly chart, and you can see that just intrinsically your question is obviously wrong. But I'm going to take you at face value nevertheless, or well, not face value. I'm not going to take you at face value. Instead, I'm going to try and look at whether or not we can see some sort of what did you say? Bull flag forming here in this here on a XTZ USD pairing when we get around to that. Okay, so stay tuned for that there, price action and all that chat. Look at this here, the chart, the yearly chart. Isn't it fantastic? Ding dong. There's not much to be seen there. Actually, while we're at it, why do we not go down here and look to the monthly chart? Low, like high, low, high, low. High, low. I don't know. This here, we do a few months of sideways, do we? And then do we break up? I don't know. There's not a lot to be learned from this. This is obviously such a nascent asset. By the way, if you want to make a comparison between something which isn't, you can say like the yearly chart. Like, are we forming an X, Y, and Z on the yearly chart? Look, the 12-month chart for Dow, for instance. Are we forming something? Now, of course, people don't tend to look at these sorts of things at all, but you can, and you can see here that well, the Dow's been a good investment forever, hasn't it? Of course, there was a bit of a problem there between sort of January 2002 and January 2009, where you didn't actually make any money, and that lasted for quite a while. And I think that's called our lives, if you remember back, if you're part of my generation. And can we just get the FTSE up real quick? Oh, this is the Amundi FTSE. No, I want the UK 100, like, the 100. Is that going to come up like that? Yeah. Whatever, I can't be bothered. I was going to just show you that it's even been even worse in the UK. It's been a complete embarrassment, but I can't be bothered there. Oh my god, I've gone off the charts entirely. Oh, come back to me. Right, okay, so what we want to look at instead is, TradingView does this from time to time. It wants to load and then it just straight up doesn't. Anyway, instead of getting distracted, let's go back to the Bitcoin pair in there and go down to a reasonable time frame, like the 24-hour one, so we can actually try and take a look at how things have been going on. So thanks so much for tuning in, and we're still in the same boat as we have been recently. We're below the 21 and the 55 EMA here on the daily time frame. We've had this high, a low, higher high. Can this be a higher low? Like low, high, higher low, higher high. Could this be our higher low coming in here? Well, we have a couple of questions that it does line up with a few things. Breaking down here towards the 50%, closing here on the 50% on this Fibonacci retracement tool thing here, would see us putting in a lower low here, which would be kind of negative towards the sort of that concept of the low, high, high, low, whatever. So we don't want to see that happening overall. In terms of whether or not this high was divergent to the previous one, well, in the DM positive, you can see it was here down on the DMI. On the stochastics it was, on the RSI it wasn't, so we were hoping for that for the RSI to be the king there on that one, and we've come back down here again to this to what's happened so far as we come to this oversold territory where you could look to, and you're an uptrend, you can look at sort of the neutral areas being below the... I'm touching my face far too much, by the way. It must be really annoying if you're looking down here. I'm going to stop doing that. I don't know why. I guess it's because of my face. My skin and my face is dry and I'm feeling the eczema. So going down here, we're in this oversold territory. You can see as part of a bull trend. Then when you get into this past the neutral line, you can some people talk about it as being oversold. And if you look here, you can see that we've currently got this sort of slightly downward trend action here. So should this come in here and be a higher low, then that would be called hidden bullish divergence. So, you'd have hidden bullish divergence here on this point. That'd be quite good to see to turn around to continue this trend towards the top side with a little bit more gusto. Having had the oscillators had a chance to somewhat slightly reset. Now, of course, as well, in terms of certain other aspects of things, we're still below this 15. We're actually below, let's bring this up full screen so I can see easier. We're below 10 on the ADX here on the DMI. Now, I want to apologize as well if I said some wrong things in previous episodes because I had these colored in the wrong way around. I'd obviously hit the wrong button at one point. So anyway, but we're still here below this 10 here on the ADX here. So we're talking volatility territory. Anytime it's below 15, you're looking at potential volatility really in terms of crypto land. It's below 10 then especially. So I do expect a change to happen fairly soon. Hopefully this can wrap back round again and go with the positive side of things and get the hidden bullish divergence of the RSI and move towards the top side, looking to sort of kind of disregard this Fibonacci retracement that we've got on the go there and bust past our resistance target there at 3,200. And that's what I'm looking for. If not, then I'm looking out for this previous low at 2,900 and asking questions, and the sort of the big target being 2,800 really here for this golden pocket sort of retrace area, just this area just here. If we then get to have a chance to turn around and we can look again at more sort of potential for different types of divergences and whatnot at the time, should that actually be the case. Maybe you want to see what the lower time frames are saying to us. Now they're not going to be saying a great deal. Here's where we see this potential for hidden bullish divergence come in at, and this in terms of the 4-hour time frame could be considered a downward trend. Starting from our highs up here at 3,170 or so with a low here, a high here, lows coming in here, highs coming in here, which are all lower, and so forth. So let's just look between this low and the previous low as part of this downward trend. Looking at this, so it's not actually bullishly divergent really quite, but we're not seeing a great deal of follow through in terms of the enthusiasm for this one, but you might do after you get past this sort of 2,900 area of our previous low. In terms of the stochastics here, you can see just between these two areas, where is this coming in at? And this is coming in at here. So yeah, actually, did I look at the wrong area on this RSI? Let me just double check. No, yeah. So we're okay in terms of the bear aspect. It's still doing okay if you're bearish on this on the low time frames and you're looking to sort of short it downwards, and you're still all right in terms of escaping from the divergence there on the RSI, but not so much on the stochastics. And looking here at the DM negative, and you can see sort of like that hidden bullish divergence coming into play, or not the hidden, just the bullish divergence, sorry, coming into play there as well on those oscillators down below. So this is what I'm hoping for a turnaround at this particular point. Now back to the dollar thing. Then we've covered everything we need to on the Bitcoin front. Thank you so much for sticking tuned, by the way. I really do absolutely appreciate it. Oh well, we're on the 4-hour just now. Let's do the same thing between this low and this low. Now this is obviously not as low as this, but it's part of a downward trend. So this is what where do we need to see it happen if it wants to come in and be lower than $2.83? So we'd be looking towards this white line here in terms of the 4-hour time frame for a turnaround, should it need to keep doing what it's doing. At the minute it's breaking down past this red line. If we go up towards the cool, let's leave that for now. As you can see as well, the ADX down there at 11, so there's still this potential for volatility like we're talking about. Go up to 24-hour time frame and look at this now. So you can see that we're just being supported at the minute, so to speak, by that red line. On the 4-hour time frame, you can see that we're actually below it just currently. Yep, you can see that we're just below it just currently. So in terms of this and having a move out from it, then you've got sort of fast easy wick action down here towards this 288 line that we're talking about here. I think demonstrated quite easily on the 4-hour time frame. On the 21 EMA coming in here just at 285. We were hoping for this to be support right here with the confluence of factors such as our upward sloping trend line, which is obviously subjective and could be moved. You can see that we're touching a couple of wicks and whatnot on the way there, but it's not exact. It's not. I don't ever bother drawing these in exactly. I like to sort of hope that rubs off on you a wee bit, that you don't want to be basing your entire life on on a diagonal line. And overall, potentially we could just be looking at this being an upward trend with a higher high, low, higher low, and whatnot on the go. And kind of comparatively, then that's not that we're doing this without the bearish divergence really. Perhaps there's a touch of it on the DMI. Yeah, there's a touch of it on the DMI, and that's kind of maybe resulted in this downward price action. It's come down. With ADX still above 15 here on this one. Again, I apologize if I said the wrong things in previous videos. Haven't had the wrong coloring. My shoulder. No idea why that's sore, by the way. Watch the Bitcoin video to see me kind of sing about it. Yeah, so we're looking at that now. Your question, right? So you're talking about the yearly time frame. Let's just make the assumption that you're talking about the you're talking about the daily, let's say, but what you had done is you'd kind of like got like a good solid couple of years on your chart, right? As a starting thing. What did you say? Sorry. I think I see a bull flag forming on the yearly chart shortly after March 2020. Am I right or wrong? Okay, let's get Bulkowski to answer this one for us. Bull flag Bulkowski. I'd already searched that because, I meant to have this tab open before starting the video, but I closed it by accident. Bulkowski's flags. Now, recently I've been using this website from time to time and saying that it ripped off Bulkowski's textbook. I want to actually apologize to Tim Bulkowski or whatever he's called, because this is his website. No wonder it ripped off his book so accurately. So whenever he does stuff like, makes updates, contact here, you can see the contact on it. There's Bulkowski himself there. There's Tom with his flying on a jet plane. That guy's face. I don't know what you call him. Only like one person watching or less, probably less, will get what I'm talking about there in terms of that singer. But he has the same face as him. So yeah, so Bulkowski, you can see here, this is his website. So interesting stuff, which makes it so that whenever there's an update on here, he updates his statistics. Then he updated them in 2018. Then and he updated the rank of it here back on about a year ago, just about 11 months ago. So we can see some sort of how Bulkowski has been keeping in touch with himself. What the fuck? Has been keeping in touch with his book and updating it and all that sort of stuff, and he does that through the website for us. So first off, right, whether you're right or wrong, what you say is here is you're making it binary. Am I right or wrong? Let's say that you're right, just not even looking at anything, and then ask Tom what does he think about the overall performance rank for breakouts of bull flags, are 56 out of 56, break even failure rate for up down breakouts not applicable. Average rise decline 10 to 8%. Pullback rate 53 to 60. Oof. Percentage meeting price target for up down breakouts 45 to 45, right? Which comes into how you measure it. So let's just assume that you're right again, and then look down to how you measure these things. And you go from A to B. This is the bear. The bull flag would be this one. A to B, and you're looking for a flagpole to be mostly vertical, by the way. Price trend can be any direction leading to the chart pattern. Looks like a small rectangle. Oh, by the way, he just talks about flags here. But whatever. Looks like a small rectangle untilted against the prevailing trend, so small being the operative word there. Price moves between two parallel or near parallel trend lines. Flags are short, less than 3 weeks long. Again, small operative word, short operative word, less than 3 weeks long. Patterns longer than that are rectangles or channels. Patterns longer than that are rectangles or channels. Patterns longer than that are rectangles and channels. I think you've got your answer there for you. Anyway, well, let's just keep going with the yes scenario. The flagpole which leads to the flag should be unusually steep and last several days. Downward trend, whatever, and then the breakout action. Well, what you do is go A to B, measure that, and then you stick it at C and use 45% of it. So let's just do that real quick here on this thing. I think you already know your answer anyhow. So bull flag, let's just say that this is the flagpole here. Then your C point is looking like about there, and then that takes you up to 5 from 3, so that's 2. So 45% of that, we'll call that a buck. So from 3 up to about there would be your breakout target, really. And that would result in you putting in a higher high in terms of the daily time frame and going up and doing some good things in terms of price action. Now that's about as much use as you can really get out of that there chat. And that's what you're looking for. The probability of this working in terms of its performance rank is it's the worst one of any pattern. And instead he says that instead what you're looking at is a rectangle or channel. Let's just stick in channel and see what he has to say about channels. Go on then, channels. Now let's do a quick comparison in terms of performance rank. Does he have he doesn't have a performance rank on this because it isn't really the same sort of deal, basically. So that's what you're looking at. Lead into channel any direction, pipe tilted up or down, but not horizontal. Not horizontal, by the way, chart champions and all the rest of it, but who cares about that? Rectangles or tops. If you want to call it a thingy, then you're looking at rectangles, rectangle tops or bottoms for horizontal channels. But, this is Bukowski. He didn't necessarily write all the rules. He just wrote this book, and all of the stuff people talk about, mostly, 9 out of 10 things that you read or hear people saying will be coming from this Bukowski chap. In terms of patterns, trend lines, 2 trend lines should be parallel, blah, blah, blah. Price should touch each trend line at least twice. Distinct peaks or valleys. Price should cross the pattern from blah, blah, blah. Whatever. Trading tactics, sloping up. You're just looking at buys and sells. You're not really looking at measured moves. But sometimes we stick measured moves on anyway, as I do. Really just kind of looking at the size of the channel, sort of the girth of it itself. Let's borrow our measuring stick for this one, bring it down here, and kind of parallelize it up with our upward sloping trend line, which if you watch previous videos, by the way, a long time ago, I had 2 lines on here, and I deleted the top one because I said it wasn't relevant. If that wasn't this chart, it was another one. Could this be it? 1 touch there, 2 touches there. Maybe, in a sense, maybe it is, maybe. But I'm feeling more like maybe we should move on to the next aspect of this instead, because but again, maybe I shouldn't have borrowed that bloody measuring tool, but you can see that this is going to add up to being the same sort of thing, right? So you stick it up here, say we break out of this or whatever, then you're adding a buck onto the price, 340 up to you're adding a buck. It's basically a buck, right? In terms of this, at whatever point that it happens at, taking you up to previous higher highs and putting other stuff in, which you'd be looking at in terms of how the price might defend itself or the bears might act in that area, right? Okay, great, done. Take that away and let's cover everything. So I hope everybody's really enjoying this episode. Obviously, people who read that question at the start might have thought, no, it's not a bull flag. It can't be a bull flag. But of course, people do often say things like really huge bull flag, stuff like that. Of course, it's not accurate. Rectangle top would be the one that we're looking for in terms of this. Cheers, by the way, Thomas. Your website's great. I recommend you go to thepatternSite.com if you want to read up on any of this sort of stuff yourself. So price trend upward leading to the chart pattern, blah, blah, blah. Prices of flat tops, bottoms, blah, blah, blah. We basically know it's a rectangle already. Let's not get on about things. Price touch should be one trend line at least 3 times and twice on the other trend line using distinct peaks and valleys, but be flexible. Trends 70% downward, volume trends downward 70% of the time, upward 63% of the time. So we can look at these sort of nuances in a minute here, I suppose, but I don't want to get too deep into it. Compute the height between trend lines A and B, and the measure rule, and then multiply it by the above percentage meeting price target. Percentage meeting price target here for this one, 78 to 54. So we can talk about somewhere around about 3/4 and get a rectangle on the go here. Let's borrow this. Actually, no, we'll not borrow that again because we already know how this is going to work out, don't we? Think we do. I think we suspect how this is going to work out. So we've got 1 touch at the bottom one, so it's not quite a perfect rectangle there. We don't have 2 yet, so maybe we could be in this for longer. In which case, it would be that if it came down here and touched this at 230 and then moved up again. We've spoken about these sorts of price targets enough times. Wouldn't like to see it operate like this. And I really don't want it to be this, but if it's going to be one of the 3 things when you start off talking about bull flags, then you're going to evolve your thinking into this probably anyway. Let's take a measured rule. Oh my God, look at that. But instead, this time you've got the measuring stick and you're going 75% of the way into this one or whatever. And that brings you up towards where, our previous high is. And this would make it more of, if we broke out towards the top side, would make it more of one of those disappointing ones where you would actually see come up here, does all this, comes up, test that, and perhaps then could reverse down the way afterwards, having put in an equal high to before and all the rest of it, which then in the long-term time frame type of things could put in a base in here, could be where this operates at. You could be having a cupwood handle on this thing, and then you could be looking at cup with handle, as we spoke about on the Chainlink video the other day, and then you could be looking at something like this, right? Overall, in terms of the shape of the thing, if that were to happen, of course, there's variations on how these things go, but you know, like, so that would be what you'd be looking at that point. Then, if that were the case, if this all worked out like that, now undo, 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 and instead, I'll just take this measuring stick here and say, take this measuring stick here and stick it down here and say, oh, look at that. That kind of adds up as you knew it would, yet again, with our symmetrical triangle type one. Looking for the breakout from this. Now, of course, again, this is ascending triangle. Of course, you know, you always, this is the thing that nobody does. You'll have seen this a million times. Is it on here in Bilkeski's? Percentage meeting price target 70 to 44. There's the A and B thing. That's what you do, and you know how this works now because we've done it a few times for examples. So this is just to point out to people how nobody ever does this in terms of the full measure move. What they talk about is the minimum price target move, whatever, blah, 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 and they use the full measure and stick off the back of it instead of doing what they should do, which is reducing this by about a quarter or so, and that would take you up towards the top of this potential channel, so we could keep going on with this one. Again, same sort of thing as before, same sort of chat, all the same sort of chat. So if you're looking at patterns, then I think I've kind of covered all the bases there for that one. If I got you completely, if I should have taken your face value and you meant the 12-month chart, then the answer is, are you right or wrong? No, you're wrong, because that doesn't mean anything. If you meant the weekly chart, then you know, maybe whatever, maybe this is, you know, this is maybe more realistic, but again, it's not quite, it doesn't actually chime with the bull flag sort of terminology. And really, you know, I think that's going to have to sort of cover us up. Cheers very much to Thomas for that. And ow, my poor shoulder. We can check in with the Ethereum prices real quick, I suppose, at the very last second of this thing, and see if we've died a death yet. No, we're still hanging in there. We could potentially get a higher low, but you know, things aren't looking particularly great in terms of all of that. But that's the way it was always going to be in the run up to a higher low, was it not? Or you know, your next one. This is how it always goes, isn't it? So we'll see how it pans out. Obviously, I'm just kind of throwing out there these ideas in advance, and the inversion of everything I say is obviously true. We're below the 21 here on the weekly at the minute, and we want to actually regain that, move towards the top side, and not put in a lower low than this over here, or else we're looking at a potential downward side trend for a wee while. So that might be something to be bearing in mind. But I don't really feel super whatever about this just yet. I'm not going to worry about it until such times as the prices have actually gone down it below that 11. Really, my shoulder's so sore. Right, okay, I'm going to catch you next time. Thanks so much for tuning in. Really appreciate it. Thanks very much. Share the video with a friend. All that stuff. I can't, and I genuinely do appreciate it. But I gotta go. My shoulder's really sore. Right, see you later. Thanks.